Broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone, and welcome to today's webinar by SolutionXchg on ECC tax audit extraction and reporting, strategies, tactics, and options. We're happy and grateful you can attend today and hope you find the topic of interest to you. My name is Kristen Gerling. I'm a partner with SolutionXchg, and I will be your host throughout the session. Our presentation today will take about 30 minutes with 10 minutes reserved for questions at the end. A few procedural and technical notes up front. All participants are on mute during the full duration of the webinar. Please post any questions or concerns through the questions function in your administration panel on the right side of your screen. If you cannot hear us or cannot see the presentation, please also alert us through the question panel. We will send a transcript out to those who are interested after the webinar. You can let us know through an email to info@solutionxchg.com. That is info@solutionxchg.com. But let's get started with our topic today. Our presenter will be Mitchell Silverstein from our partner organization, Brandywine Data Management Solutions. Mitchell, I'll turn it over to you.
Thank you, Kristen. A brief word about Brandywine. We've partnered with SolutionXchg since SolutionXchg came onto the market. And our primary focus is on the data archiving space, although our background includes virtually all topics in the archiving world, including working with the content servers storage vendors such as OpenText and KGS, and with background in ILM generally, information lifecycle management, both the software component and the topic at large. We are also a reseller of various solutions where they fit with our customers, including TJC, which provides tax and audit software solutions, and PBS, which includes archiving add-ons for data archiving, as well as tax and audit specialized solutions as well. And we, as with SolutionXchg, have a 20-year background plus in the SAP implementation market. The primary objective here is partly functional, partly technical, but from the focus we'll look at is mostly from the functional side. We'll talk about technical issues as well. We want to be able to provide a mechanism to support tax audits of an ongoing SAP system, and generally speaking, you want to plan that to be in place before the audit requests occur. That can require some lead time and some solutions that could be potentially beyond what standard SAP offers. We'll look at various options along the way here. And the driver for that requires a number of considerations, which we'll look at shortly. One of those is whether the organization is US-centric or includes multinational requirements. That can significantly alter the scope of the methodology that is used and potentially the tools that are used. The requirement, generally speaking, is, as with any financial reporting requirement, to be both accurate and provide mechanisms where possible where those reports and results cannot be changed. We'll look at methods for doing that in the tools that are available. One key item from an audit perspective, wherever possible, is to protect the original host system of record, to keep auditors out of the original system so that what they are asking for and what they are provided are limited, and therefore they don't have the ability to go on a fishing expedition. So from that perspective, to the extent that it's possible to provide an extraction method and reporting that is totally outside of the original ECC system, as opposed to being performed within it directly. That provides additional protection from the organization's perspective. And as a side benefit, there are solutions that will provide a support for legacy decommissioning, in the sense that one of the key reasons for keeping old SAP systems alive is to support financial audits for prior years, not for operational purposes. And there are methodologies that we'll be discussing that will provide the ability for that historic content that is necessary for a financial audit or tax audit to be available from the surviving ECC system, and potentially allow that legacy system to be decommissioned, turned off, and provide the benefit from the back end of not having to support an old system infinitely. The main considerations in looking at various methodologies for tax and audit reporting are these 4 main bullet points, some more important than others. The scope that we touched on just briefly before is the US versus multinational scope. We'll look at specifics around that shortly. The notion about legal entities within an ECC system can make a solution more or less functionally complex, as well as technically difficult to support. That from an SAP ECC system mostly deals with the usage of company codes and some other linkages between company codes, and as well the extent to which the content needs to be provided, both the breadth meaning from a functional perspective, FI being the core, and how that relates to supporting documents, reference documents, as well as the extent to which key tables from SAP and the fields and the contents of those tables and fields need to be mined and provided as well. From a timing perspective, what is most important and what distinguishes some of the tools at one's disposal is whether data is still intact in the online system presently, or whether data archiving has already occurred. And likewise, if archiving has not occurred yet, nor has preservation of the content that is tax audit relevant, are there methodologies for getting to that content after the data archiving has occurred or not? That affects not only access to the content itself, but also can affect the project to implement data archiving, and whether the determination of what and how to preserve from an audit perspective needs to become a barrier to archiving, and becomes both a time barrier as well as a resource barrier. The second part of timing has to do with the availability of content for tax audit purposes. In a normal US-centric Internal Revenue Service situation, there might be a 3 or 4 year lag between the current year and the years that are subject to audit. That can differ by organization. Some organizations are under constant audit, in which case their lag may only be 1 or 2 years. But that affects the timing of when the tax audit relevant information needs to be made available to an auditor, and the processes used to provide that content. The alternative to that is having the ability to perform an on-demand or support an on-demand request, hopefully from the audit team itself, but potentially through a technical team. And the difference there is whether you create a static view of tax audit relevant information years in advance and what that content is, or knowing what the actual requirements are at the time and being able to generate the output at that time. The third main bullet regards volume of data, in that some of these tools, SAP standard tools or add-on tools, differ in their ability to deal with high volume situations especially. The runtime, how long it takes to get the content out, and how large these output files can be fairly significant on a per month or per period basis, and therefore the volume of data, especially the high volume situations, can drive which type of solution might be a best fit. And the fourth one is cost, both the direct cost, meaning is the software SAP standard and included, or you buy a party package, but also the indirect costs of what does it take to implement either the SAP standard or a third-party solution in the ECC system, both from a functional resource perspective to shape the requirements and get the tools to do what they're supposed to do, as well as supporting the back end and getting the software in place, current, operational. We'll look at each of those in more detail as well. With regard to the scope of data that would be considered the requirements of this project of supporting tax and financial audit situations, what I've shown here on the right side is a condensed version of a typical information document request, an IDR from the IRS. This is usually a starting point for a typical audit, not the end point, but this is a fairly common core of any given financial audit. And the three main ones I'll highlight here, meaning the chart of accounts inside the financial system as defined in SAP, all the accounts that potentially may have financial postings to it, the balances associated with those accounts for given years that are requested for a given audit, in this case, 3 particular years with a, as you can see, a 4+ year lag between the current day and the years under audit. And as well, the detailed ledger is every individual transaction that makes up the balances that are in the middle. So because of that, especially in a high volume situation, that can be hundreds of millions of data rows to support a given year, or maybe hundreds of millions of rows of data to support a particular month, depending on the volume inside the organization. The multinational aspects of the scope of data that would be required for an audit depends on where the organization does business, but there are various countries that have defined their own distinct sorts of requirements, both with regard to the extent of the data that's provided, the tables and fields and how they are linked together, as well as the output formats that are provided as well. So Germany has an extended view of what they want to see out of an SAP system in a standardized way. The SAFT requirement, or the standard audit file for tax, has been adopted by various countries as shown, starting with Portugal, but now is spreading to other countries in Europe primarily as well. And that there is an approach there to define not only the tables and fields and contents and how they're shown, but also the format in which they are delivered out of an SAP system, which is not a typical native SAP-friendly format. So there are challenges both on how to collect the content, as well as how to provide it and how to validate that what is being provided matches what is being requested. And then France has its own specific SAFT-like requirement, but again is very specific to tables and fields and content that the French regulatory authorities have required. And that differs not only because of what content they're looking for, but also the relative immediacy in which that content needs to be provided. So in the FAC requirements, there is the potential for an auditor to make a very short-term request for very near-term data out of the system, whereas the IRS tends to have the fairly predictable multi-year request with a multi-year lag. So not only does the responsiveness change, but also the necessity to have these methodologies and tools in place and at the ready, depending on the situation for US or various country-specific requirements. Digging a little deeper into the content perspective, this is a little bit more of a table-centric view, so it may be a little more technical in nature, but it has more functional implications than maybe it appears at first. But the center of the universe typically tends to be the financial postings in the system. And those are mostly driven from the financial header and line item perspective. I'll just give a little caveat. This is a typical ECC-based environment. I'll speak very briefly to the S/4HANA world a little bit later, but the general concept is going to be the same, is that the tables where the primary financial postings exist are the main driver, where the key selection criteria will typically be at minimum the fiscal year and potentially per period basis. And then the company code or company codes are going to be the legal entities that also define which sets of content are provided. But in addition to speaking of that, the reference documents that are both the creators of the financial postings, as well as in some cases the recipients of financial postings, are also of interest to the tax authorities, generally speaking, in an audit. So it's not just that the financial postings themselves are isolated as the sole requirement, but generally speaking, if they're sales related postings, the reference documents from the sales side, orders or billing or deliveries that are related, are generally needed to be referenced back to support the financial postings. That doesn't mean the sales world in its entirety, all the sales and all the related documents, but only those that have a direct financial relationship need to be available, as well as those from the purchasing side, the inventory side. The balances that were referenced earlier are part of this as well, which are more of a summary view of the financial postings, and master data is necessary to encapsulate as well, to provide access to the vendor customer specific information that can be relevant both to jurisdictions where the activity occurred, as well as to looking at customer or vendor histories and having various information that is not the entire master data scheme, but a subset, again, that have direct reference into the postings. What I'm looking at here is a dissection, if you will, of the financial header table, BKPF table in this case, of an ECC system. This view of the world is maybe familiar from a methodology perspective to that which would be used in a data archiving scheme, but its primary purpose here is to break out not only the company codes that are assigned and the relative data volumes that are associated with the years under question and under audit, but also to aggregate them one step up to the country assignments for two reasons. One is that as we looked at earlier, various countries have created their own specific country-specific requirements, so that by looking at the broader view here and seeing that there's activity in these years in Portugal, for example, for PT, it's then recognized that the SAP for Portugal solution, whether SAP's version third-party solution, needs to be available to satisfy the requirement there, that a typical US-centric solution is not going to be adequate. Also, by looking at the US area, there are multiple company codes here, and therefore those are either specified explicitly in an IRS-based audit as being individually audited or as a group under audit. But it can be shown here that primary activity occurs in company code 1001, but there are some supporting information and necessary information, most likely, in the two smaller company codes. And this will affect how the extraction model is executed, whether they are individually executed, whether they are bundled together. But the volume here also speaks to the estimates of runtime, whether high volume tools may be necessary because of the individual volumes for a particular year. So it provides also control counts that are used in the overall process so that when an extraction model and reporting model is used, to make sure that it is complete, that it has no more than expected, no less, but is exactly what is expected from what the database is telling you here to what you get from in the output of an extraction and reporting tool. All right, where does the audit activity fit in the overall life cycle of the data from creation to destruction? This may be a familiar view from an SAP perspective about the overall life and useful life of data in the database. What we're really focused on right now is towards the middle here, which is there are various blips in time. This might be 3 years out from creation, or it might be 7 years out from creation. But generally speaking, if you're looking at a US scenario where there is typically 7 years of useful life and necessary life from creation time from 2012 to 2019, for example, that typically the audit will happen with that lag from creation time, but before it's destroyed and out of the system. And the other activities are relevant for other purposes, but we're focused on when can or does an audit typically occur, and how do you satisfy the request? Where does the data live at that point in time? There may be data archiving that already occurred, and the audit's occurring sometime subsequent to that, which is typical, where our archiving may occur after year 2. The data is out of the online system, but still in an archive environment or in a file system, but it still needs to be accessible to support the tools that we'll speak about to support the tax audit situation. The volume of data, which I made reference to previously, is not only is there too much data for a certain tool to handle, but also what are the implications from a technical perspective primarily to handling either small volumes or large volumes. Considerations partly are, will the programs that are used to access the data handle the volume that's being asked for? And in some cases, the volume for a given year, although it would be convenient to extract a whole year at one time, may be too much, even for a mid-sized company. And in those cases, the extraction may have to be reduced down to a smaller unit of measure, such as a month or period, which is fairly common. But in those cases, 12 individual periods or 16 periods that make up a whole year have to then be bundled together, delivered together, and in some cases, making sure that there's no overlap between those individual periods, so that the total is and the sum of the parts are the same. The second one has to do with how long does it take to get that particular extract set out of the system and into files that are usable for tax audit purposes. That can take, in a very small company, only a week or two. In a mid-sized company, it can take more than a month of calendar time to get it out of the system. That's typically called the season for performing the extracts. And that is usually 2 to 3 months after the end of a fiscal year, which may be the calendar year or maybe a different ending time in the year for when the fiscal year ends. But nonetheless, it could take several months for these extracts of a prior year to occur. And if you're doing this for the first time and trying to catch up and performing extracts for multiple years, that can take, again, multiple months or almost up to a year to do catch-ups for supporting audits going backwards, if you're doing this in advance. And then part of the consideration there is that even though this is generally a read-only process against the online system, just like with archiving or with any other reports, want to make sure that the reports don't run too long, that they're not running 36 hours straight necessarily, but in small enough manageable chunks of processing time and not happening over periods of time, such as period end close, which would be fairly sensitive to long-running processes. So that needs to be taken into account in the calendar of how long does it take to get out of the system. And generally speaking, what we're referring to in the extraction process is creating flat files or physical files in a physical file system, a Windows or Unix or Linux file system, so that there needs to be a determination how large are these extract files going to be, especially for 1 or multiple years of time. It's generally going to be smaller than the total size of the database sliced for that particular year or multiple years, but it can be a multi-gigabyte, multi-hundred gigabyte consideration, potentially multiple terabytes, and therefore there needs to be not only exercise on how to size that, but also making sure there's provisioning for a safe space for these files to be and kept in a secure spot where they can't be browsed by users who don't have authorization to do so. And then the fourth part having to do with volume is, based on the volume, can these tools be run only in the background, or as they are typically devised, to be able to do some online reporting and filtering of content. In the case of high volume, sometimes that's not possible, and that can present a challenge as well. The cost factors we spoke about briefly before, but the two major components are, is it standard SAP, meaning included already, quote unquote free, or is this a third-party software component which does have a purchase price and potentially annual maintenance and those other software-related costs? That's a consideration, but not the only one. Change management can be a significant one, meaning what effort is required to get the software not only in place, even if it's standard SAP, the core software may be in place, but as with every other standard SAP component, there are SAP notes that are, in this case, fairly sizable in number, potentially. There are changes that occur automatically when going to different enhancement packs or support packs, and there need to be then consideration of keeping it in sync with the requirements that have been offered and making sure it's fully operational. Some of these are manual changes, some of them are more traditional technical SAP notes, and then the notion of third-party products are generally leaner by design and therefore typically have a smaller footprint with regard to the change management efforts required. But there is a first-time installation and first-time testing cycle that would typically be required there. The third consideration with regard to the cost really will help to determine, does the standard SAP solution or does the third-party solution fit best? We'll deal with whether or not there are enhancements required to the standard SAP solution, or are those already accommodated by a third-party product. That has a small or larger cost, and we'll look at some examples of how that differs later. And then the time to deployment, how long does it take to get, quote unquote, out of the box and into execution, will differ depending partly on the requirements, partly on the tools that are used. So we'll look at 5 different methods here, not in the grandest detail, but we're going to go through the highlights of each of them. The first one being traditional, I have an SAP system, I already have standard transactions, I already have ways to get data out into files. Isn't that good enough? And the answer is yes and no. We'll talk briefly about BW as an alternative to that, where that's in place and where it's populated properly, the SAP Dart tool, and then PBS has a supplemental tool to Dart where archiving has already occurred, and then TJC has a standalone product for audit extraction specifically that has, again, we'll weigh cost, benefits, and strengths, weaknesses of each. In the traditional model, and I'll use as a guidance for this, an IRS model, US model for tax audit extraction. They provide basically a shopping list of here's the sort of content we want to see by whatever method you use. But if you're going to use standard SAP and just use transactions and standard reports, here are those top 3 items that we always want to see and how we want to get to them. So they provide guidance about tables they want to see the content from, and also, which I'm not showing here, the specific fields that they would typically ask for. So there's a starting point to say, if I just want to use standard methodology, could you do that and support an audit? Potentially, yes, but with no real protections around the content, no validations going on, and no security around the content that's being provided. So that's one of the major weaknesses to using this approach, although it is possible technically. The most common solution that's looked at is the data retention tool, which is in standard in ECC 5 and above, and has been available for many, many years at this point. But the 3 considerations that are still valid from the general sense are valid here, and will determine whether DART is the best fit or not, which have to do with the scope. Again, the main consideration around timing is that because it has the ability to report against the online content, but has very, very limited ability to report against the archived content, is that it generally has to be run in advance of data archiving, with very, very few options to use it after archiving. And then the second part of the timing is that as a result of that running before archiving, it often is a best guess years in advance of what is going to be asked for in an audit. And if those requirements change at the time of audit, it becomes troublesome to get to or supplement what you've already captured in the DART tool. And then whether or not it is truly free because it's SAP standard, as we explored previously, that will depend on whether out of the box is good enough or whether extensions are required. So the 3 main categories of consideration around execution of the DART tool, data retention tool, is refining that scope, meaning DART comes with a predefined scope of fields, tables and fields that are thought to be relevant for traditional audit situations as determined by the ASAG group in the US and DSAG in Germany. And that is a fine starting point, but it usually is not 100% of what is required. It may be 90+%, gives you a good starting point, but there will likely be extensions required to meet the specific organizational requirements of a US audit, and especially of a foreign audit. There's the execution of the extraction out of the online database, which is a technical exercise, generally speaking, but has those functional implications to it as well. And then there's a third step here, which is reporting for a given audit generally is a subset of what the extract contains. So when an audit request asks for a particular subset of time, subset of company codes, a subset of fields out of key tables, generally speaking, there is a set of reports that have to be crafted to then mine the extract out of a file to then provide another set of files that are handed off for supporting an audit. So that is one additional process that is not required by some other tools, and there are some considerations, pluses and minuses around that. I won't go into grand detail about what is included other than to show an example here where the financial header, which again is one of the key tables around the core of an audit, has predefined in DART a number of fields here, but the IRS request for a US-based audit may have additional fields beyond the standard list, and therefore that by definition requires extensions, and extensions in this tool require a level of development. Not necessarily ultra complex, but it's not out of the box either. The methodology for creating extracts in themselves is like any other report for the most part, specifying a company code or range of company codes and a period of time, in this case limited to a year at a time and one or more periods, and specifying what to include of subsets of data, and a naming scheme for creating a set of files for the extract process. And then subsequently, there are a set of reports or programs that use that extract and provide additional files for specific purposes. So the trial balance request has a report, which was item 1 on the IDR for the IRS. Then the details is a second report, which is all the transactions themselves, which is again much more voluminous. And each individual subset of data has typically its own report, some of which are SAP standard as a template, but can also be modified, and using generated versions of these reports or views can then support the audit requirements themselves. The cost for Dart, as referenced before, it may be free, but for those that are familiar with this as a business school or otherwise expression, there ain't no such thing as a free lunch, and therefore the free software may have development costs associated with it. It may have costs associated with getting the version current up to the current support pack and SAP notes applied, which could be tens or hundreds of changes depending on the starting point in the system, and therefore there can be some substantial costs associated with getting this tool ready to run properly. And as I referenced before, does this run in S/4HANA? The tool is delivered in S/4HANA, and it leverages compatibility views to use the old table structures that the software knows about, even though HANA by definition has a more unified structure to it and a different structure, but it is considered backward compatible to answer anyone's question around that. So the main strengths of Dart as a tool, just in general, is that it comes with a predefined scope of data, which may require extensions for a given situation. There are built-in control totals to help to validate the results. There are technical checksums to make sure that over time the extract as generated is unaltered. So there are ways to run validations against checksums and to prove that extracts generated years ago still are untouched and unaltered from their original form. And they are, since Dart has been around for 16 plus years, it is a familiar format for especially the US auditors as well as Revenue Canada and others. So they've already formulated ways to be familiar and handle the output of this tool, and therefore it's not something that requires great negotiation with them, which is a good thing. And in general, because Dart is free and it's been around for a long while, it's used from between 80 to 90% of users that need a solution like this will follow on SAP Dart as at least a starting point, and usually where they stop, but not always. And then the weaknesses, as I mentioned before, is how long does it take and what expense and effort to get the software current and keep it current over time, since it's a moving target. About SAP notes happening constantly as there are changes to country requirements or US requirements for additional fields or additional tables to be extracted. And also the most important one really here, from my perspective, is the best guess concept, which is generally you're performing these extracts years ahead of time, and you're hoping that what you guessed would be necessary for supporting an audit is really all that's needed at the time the request is made. Has proven not always to be the case. So I call that paradigm B. And then the multi-step processing, as illustrated before, is that it requires both the extract out of the database and subsequent generation of subsets of additional files to support the tax audit request. very briefly, the PBS add-on for CDART is intended to bridge that gap that Dart out of the box has, which is the inability to report against archived content. And PBS archive add-ons are primarily used for display transactions to see archive data and bridge functional gaps in that realm. But likewise, there has been developed this CDART tool, which is not a direct plugin to the Dart primary program itself, but PBS provides a Dart-like core program that has the ability to draw upon archive content and include it in the selection criteria and in the results. And therefore, it doesn't really change the paradigm of how Dart works or what the output files look like. It only makes the content more complete where archiving has occurred, or if changes in requirements dictate that an extract needs to be regenerated. So that's its primary purpose. It's not a substitute for Dart, but it's more of a complement to it. The requirements gathering is still the same, the output's still the same, but enhanced, and that's its primary purpose here. So as shown here, the only additional piece to it is that the program that's used to perform the extraction process knows to look into PBS generated indices against archive content, and therefore online table content and archive content are merged together to provide similar Dart extracts that the Dart tool would provide itself, other than it is more complete because it has the ability to see 100% of what had been generated for a particular year, as opposed to only that which still remains online. The reporting mechanism and delivering the files to auditors and all that remains exactly the same. So with that, the main weakness around that solution is more change management wise, which is that the plugin for CDART has to stay exactly synchronized with the Dart tool as it evolves over time. And that is provided, it's just an extra step that as Dart evolves and notes are applied, a similar activity occurs with the CDART tool as well. The Audit Extraction Cockpit from TJC is designed to tackle the same challenges as Dart, but it has a little bit of a different paradigm to it. Its greatest strength is actually twofold, really. One is that within the tool itself, it has the ability to re-archive content on request. So there's no third-party additional tool required. It's all integrated to see online or archive content, or both merged together. And from a paradigm perspective, its main strength is that it's designed, therefore, to be an on-demand type tool, not a best guess kind of a tool. Because it can look back to archive content and merge with the online data, it has a different approach to extraction. So it has a simplified process because it's designed to be on demand at the time of an audit, where the exact requirements are known, not the best guess, but actually following the request. It also is designed to have dynamic selections as a result, so that although it starts with a given predefined scope of data, any additional tables and fields that are required are able to be selected dynamically without requiring development efforts. And because it has an on-demand model to it, it generates both the extract file and the final file are really one and the same, whereas the Dart tool creates an extract first, requires a subset of filtered content to be provided and extracted essentially to a second time and then handed off to the auditor. So it's a more streamlined approach as well. So that really is the highlights being the strength of the paradigm A, as I call it, which is the on-demand model, and fewer steps in as a result of that, meaning what you extract is what you want, which is what you provide. And it also has, similar to Dart, but in a slightly different way, technical validation and functional validation of the contents as well. So control totals and checksums are part of what it generates as well. The other strength to the TJC model and the ECC framework is that where you have those country-specific requirements for Portugal and other countries for SAFT, or for France for the FEC, there are add-ons to the AEC that are designed specifically to target those requirements, whereas for the DART tool, that becomes a totally separate program stream and add-ons to support the country-specific requirements. And based on experience, these country-specific targeted solutions are much more easy to implement and to execute and to get results from than using the DART model. The downside is twofold. One is there is an external cost, but again, you look at the bundle costs together, both software and other components. And secondarily, it's not as familiar with the IRS and other tax authorities as the DART tool and the DART output, but it's growing and it is supported and has been accepted by tax auditors. So it's not a risk in that regard. So our final view is trying to put those two main components into perspective and looking at their strengths and weaknesses. And as you've heard, the paradigm is one of the biggest ones, which is the best guess versus dynamic selection as the requirements are in front of you, has a significant benefit and reduces risk of not being able to deliver on time what has been requested. There is a balancing of costs to making that happen, and other considerations primarily being the data archiving part of it, which is the content fully accessible for the audit extraction when it needs to be performed, where DART does not have that as a standard capability, and the AEC does. With that, we'll leave the best fit determination to be determined based on each individual organization's circumstances and time to delivery, other considerations about where they do business, everything that we've mentioned before. And with that, I will go hand it back to Kristen.
Thank you, Mitchell. Thank you very much. That was very, very interesting. Just a few words before we open up the floor for questions about who is SolutionXchg. SolutionXchg is a company formed by consultants that have a long experience in the SAP implementation market. We have been around over 20 years, more than 20 years actually, and we specialize in bringing innovative European software products to the US market. Premier KGS and Eternity reseller in the US. We have a strong expertise in anything around archiving and document management around SAP. And with our solutions, we specialize in low cost, high quality, and high ROI solutions. So we want to make your IT infrastructure environment around SAP more cost effective. With that, I will, this concludes the presentation part of our webinar, and we'll take a few questions. Thank you again for listening. Please post your questions in the question panel on the right side of the screen. I have one question that came in during the webinar itself, and that is, what is the typical duration of a tax implementation project, Mitchell?
Well, as you can imagine, it can differ based on the circumstances of the organization, not just by size, but also the country-specific issues that can arise if it's a US-only situation versus a multinational or both. So that complexity will change. But if we take the core of the US-based project-based model first and then add on to that, on average, that tends to be a 3 to 6 month type of a project in total. The requirements gathering part tends to be part of the complex part of that, so that is part of the overall process. So end to end, though, saying that you want to solve the ability to satisfy an IRS audit for prior years, for example, that tends to work from the historical background, working forward through the implementation of the software solution that is the best fit, through execution in a test system and getting that through the environments functionally and technically, through mock audits before final sign-off to perform production-based audit extracts and deliverables for the tax authorities. That tends to be in that 3 to 6 month window. It's very rare that it's faster than that because there are various teams involved. And if the multinational situations come into play, that can tend to push it out an additional 3 to 6 months, depending on the level of complexity, again, in the organization. So that's the general framework. Is it's not something that can be done in 30 days from start to finish, even if using standard SAP Dart out of the box.
Okay, thank you very much. And I see no more questions have come in. So thanks everyone for attending our webinar today, and we hope you got some interesting takeaways. And until next time, we say goodbye. Thanks again and goodbye.